What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Wednesday out there. Hope you guys are all doing well. Really chill live stream here today. Let's share the screen and just get right into it. Starting off at bitcoinandmarkets.com. Let me adjust the size down here. All right. Bitcoinandmarkets.com. That's where all my stuff comes out. I did just post something to the premium members. Check it out. Exhaustion in the Bitcoin market. That's kind of the theme for today. We're going to talk quite a bit about that. We're going to go through some tweets. We're going to answer your questions, talk about what you guys want to talk about. Another thing that I will bring up is this one. BitcoinTreasuries.net. If you guys are unaware, I've started doing their spaces for them. Telegram, I'm going to switch your. There we go. BitcoinTreasuries.net. Let's see. Do I have it pulled up? I have it right here. Sure, this tab. So they are a website that tracks all of these treasuries. They track 169 treasury companies. It was public companies. It was 167 yesterday, but now it's 169 today. So you can see how fast this space is evolving. But they track all this with all sorts of different metrics. They have a free account. They have emails that go out, email alerts. They have all sorts of things. So check it out at BitcoinTreasuries.net. But yes, I am doing their live streams for them. So join me every morning at 9 a.m. I'm going to have as many guests on as I can. Let's scroll down here and see where today's was. There's today's stream or space. So join me at 9 a.m. every day over there on the BTC Treasuries account. Yesterday, I had Stephen Lupka of Nakamoto on, and we had a good chat for about an hour. Pretty fun, good way to start your day right before the opening bell and all of that. On Friday, we have British HODL coming on, so that will be a good one. Make sure you join me on Friday. All right. So that's that. What do we want to get into? Let's get into the charts. Bitcoin daily chart here. Feeling pretty ugly, but not looking that ugly. I mean, we didn't hit a new low. We didn't have a new low close. That's still back here. August 2nd was our low close. So we do have technically a higher low off of an all-time high. A lot of people were talking about this being an MSTR sell-off because they updated their MNAV guidance. And I just wanted to show you this. So if we point an arrow to the MNAV guidance, it was at 8 o'clock on the 18th. Right here. 8 o'clock. Look how far it had already fallen. This was the vast majority of the move down to here. Over 7.5% before the MSTR announcement, and then really just kind of petered out. So this is not MSTR related. This is just most likely there's stuff going on in the market that is forcing people to sell. There's some stuff going on over in Korea. I covered that with the Telegram guys before. So if you guys want to get access to those type of discussions, you have to join the Telegram and you can listen to all the recordings. I post all the recordings of these things later in the Telegram. But let's go to BTC Euro. BTC, where am I at? BTC Euro. It's on Coinbase, but you can see this is the 100 euro supply zone. Still can't quite break out of this. And what do I mean by this? So if I'm an early Bitcoiner and I bought below 1,000, say, and 100K is a big round number. And that was important as well for the dollar 100K. But now we're hitting this euro 100K. And I think there's going to be sellers. They put some sells in, and they're not going to be like price sensitive, panic selling. What they're going to do is they're going to put a bid in, and they'll probably ease their way in. They're not going to put, say, they have 1,000 Bitcoins and they're going to put them all on the market in one big sell order. No, they'll put 10 Bitcoins here, 20 Bitcoins here, 10 Bitcoins here at different prices, maybe going all the way up to 110 or something. I don't know, but they're slowly going to be selling these off. And so this is the supply zone that I'm talking about. And we can't quite break out of this. But if we go back to the dollar, this dollar chart, you can see that same sort of supply zone. Let's see where we want to go. Like right around here. This is that dollar up to like 105, 110 maybe. That same $100,000 supply zone, that corresponds to this 100,000 euro supply zone that we've been watching. So I think that has a lot to do with it structurally. Okay, how about some other prices? Ethereum selling off, having a big bounce today, but actually closing below this important December high from, if you go all the way back here, this was the high from last December. They closed down below it yesterday, and then they bounced up today, closing the gap most likely on that. But we'll see what is in store for the altcoin season. I don't think there's too much juice in the tank or fuel in the tank. Okay, how about MSTR? Lots and lots of bearish sentiment here on MSTR. I just saw a tweet before going live and it said something like there's two types of MSTR investors. Okay, there's the Bitcoin maxis that have invested in MSTR, and they don't really care about the dollar price of the shares. They care about the Bitcoin per share, and they want accretive dilution. So the Bitcoin maxis are looking for accretive dilution. And I think there has been quite a bit of that, actually. So if you go back to some of these earlier prices, like I saw a comparison back here in November with the price at the same level, the Bitcoin per share was like 0.01 or something. And now it's 0.02. So they've actually like doubled the amount of Bitcoin, even though they... in that ballpark, okay, even though the price is the same. So that's the Bitcoin maxi investor, and they don't care about the price. This doesn't even get our heart beating. And then there's the fiat maxis, the ones that are trying to maximize the return, maximize the gain in the actual shares. And they're the ones that are kind of freaking out because they have a completely different mindset than the Bitcoin maxis who are trying to just accumulate Bitcoin. So you can tell kind of the noobs versus the Bitcoiners. And I thought that was a very, very interesting tweet. But I'm not too worried about this. I'm not too worried about any sort of bubble popping in MSTR. I think it's got a long way to go, at least probably a 10x from here. When Bitcoin, in the bear market, I might get a little worried about MSTR, especially if they continue to leverage up. They're not super highly leveraged. I think it's only like their debt is like 10% of their underlying value of Bitcoin. So I'm not worried about them being over leveraged yet. But if they continue down this bull market and continue to take out debt, I might start getting worried in the bear market. What does that mean? Some people I've seen also on Twitter say, hey, MSTR just needs to say they will sell some Bitcoin to meet these debt obligations. So these dividends that they've promised, a lot of people are saying, to pay the dividends, you have to issue more shares. And that's like a Ponzi scheme. So all they need to say is, hey, we'll sell Bitcoin if we have to. But that is very dangerous because if they say that, then the bottom of their stock is going to fall out. People are going to run because that's just not something you want to say. So I doubt they're going to say something like that. They're just going to keep stacking and go from there. Having a good rally here off the bottom. It's a nice looking candle up 2.5% today. Let's go to gold. Gold's still stuck in this coiling behavior, consolidation. I said back here, let's see, I don't know where I had all my buys or my sells. Let's see if I have them on here still. So I'm a rehabilitated gold bug. That's where I came from, the gold bug space. And so I never sold any gold. And as it was coming up here to over 3,000, I'm like, oh man, I have this gold. I need to turn it into, hey, I can turn this into MicroStrategy, or I could turn this into Bitcoin, whatever. And so I started selling a little bit along the way. And I said, I'm doing this too because I think the rest of the year is going to be a consolidation. Usually Bitcoin takes off, gold takes off, and then Bitcoin follows once the run in gold is over. That's happened for the last 2 years. And so I thought that was going to continue, and the rest of this year was going to be consolidation. So far, it's done better than I thought, but it is consolidating, and it's been consolidating all the way here from April to August. So that, how many months is that? 4 months now. And it'll probably continue consolidating for another few months, maybe even out to the end of the year. And it will turn out that this whole story this year for gold was a big rally and long-term consolidation. So that's what's happening with gold. Let's check out the dollar. Putting in a new higher low. This is the September rate cut that's coming right here. And I think that's going to really explode the value of the dollar. See back here, the first Fed cut back in September of last year really was right at the bottom, pretty close, and rallied hard into inauguration. And then it's been down since because other central banks continued to cut while the Fed paused. And so that's part of my thesis. But I think the dollar is going to rally here in a little bit. Let's go to some of the Fed minute notes. So Fed minutes came out. And we'll hit some of the highlights here. They always come out, I think it's like 14 days after last meeting, or maybe 21 days, something like that, in the middle of the meetings. But here's Crypto Rover, and they are reporting. So FOMC minutes are out. Here are the key takeaways. Tariff effects may take longer to materialize. So their whole freaking theory right now is that tariffs are going to cause price rises, and maybe they will. Okay. But look, is that the proper role of the Federal Reserve? Should they fight tax hikes? The effects of tax hikes, should they fight those? I don't think so. What if there was a big tax on gasoline, and that tax on gasoline forced all prices to go up 25% or something like that? Is that proper role of monetary policy to fight a tax hike? No, it's not. Plus, it's all theoretical. They even have their old data from the last Trump administration when he was doing the tariff war with China, and it didn't affect prices. But now they still are going with some old washed up theories about these effects of tariffs, and they're using this theory to run their monetary policy instead of being data driven or data dependent. They've totally thrown that out the window. Tariffs effects may take longer to materialize. They have no idea. This reminds me of the dang lags, the monetary policy transmission. How does it go from their monetary policy decision to being implemented into the broader market? That's the transmission of their monetary policy. And the whole idea is built on these lags. So it takes time for our policy to have its desired effects on the market. And they've talked about this, they've written about this for decades. Monetary policy transmission. And it's about lags. And they don't know. You say, how long are these lags? I don't know. Anywhere between 6 months and 24 months. They have no idea. Do you know why they have no idea? And they can't study it? Because they don't freaking exist. They're an imaginary, made-up concept that doesn't exist. Now, if they're talking about tariffs effects may take longer to materialize. I wonder why. Probably because their damn theory is wrong. Have they ever? That's like never crossed their mind that their theories could be wrong, and they're wrong every single time. Oh God. Okay, growing concerns over stretched asset valuations. Again, they don't know this. They don't know this. I would say that real estate is going to have a rude awakening here, especially in certain parts of the country. I think other parts of the country are more healthy, where they have built out and it is cheaper to buy a home in certain places. I think that some places are going to be less affected, but I do think there's a rude awakening coming for real estate. So there are some asset valuations that are stretched, but I don't think stocks are, well, maybe AI stocks. AI might be overvalued. They're probably in a very big bubble. But overall, as a general statement, if you say asset valuations, I don't think so. I don't see that. A majority view inflation as a bigger risk than employment. Okay. Well, I just saw something where people are saying they have some, I don't know if it's insider knowledge or they have some hints that there's going to be major revisions again to the payrolls. It's looking really bad. And I think payrolls will come out before the next FOMC. So they're in for another rude awakening when it comes to employment. Inflation is not a threat. It is not a threat at all. It is so far from being a threat. And they couldn't do anything anyway. Full impact of tariffs may take more time to unfold. That's the same as the first one. So whatever, man. Okay, so back to DXY. Share that screen. If you guys are watching on YouTube, what's up? Like, comment, share, subscribe, all of that stuff. Appreciate you. Check out Telegram channel, t.me/Bitcoin and markets. That's where my main community is. Let me see if there's any comments from Telegram before I go on. Wonder how you guys like my rant. Okay. All right. So that's the dollar. I do expect it to bottom. And really quickly, let me go over why. Well, do I want to go into that whole spiel? I'll try to do it quickly. So as central bank rate cuts are seen as stimulatory. Are they stimulatory? No. But they're believed to be stimulatory. So if one central bank is cutting while another central bank is not cutting, what does the market believe about the future performance of those economies? Most likely the one that's cutting is going to be doing better. And so in the Forex markets, they're going to set up their trades to be long the cutting currency and short the hiking or the pausing currency. So in this case, when the Fed first cut rates back here, September of 24, that was a bullish sign for the dollar, and the dollar rallied. Then they stopped cutting. See, the Fed paused here. So in January, they didn't cut. Their last cut was in December, right before the inauguration. But they paused while other central banks continued to cut. I think the ECB had 3 more cuts. So like the other central banks are continuing to cut while the Fed is not cutting. So how are you going to set up your Forex trades? You're going to set them up to be long the euro and short the dollar. And what's the biggest pair in the DXY? It is the euro. 67% is the euro. And that, I mean, if you look at how much did this come down? Let's measure this from the top right before the inauguration. It was 110. to, let's just do right now, today. It's 10% down, okay? It's 10% down. Let's go to some of these other ones. This is dollar as well, but this is trade weighted. And we'll go up to the current level. And it's only down 7%. So 7% versus 10%. Okay. And how about this one? This is the emerging markets trade weighted. If we go up to the current level at 5%. So if you measure it against the euro specifically, or mainly, that's the DXY, you get 10%. If you go to trade weighted, it's 7%. And emerging markets, it's 5%. That makes sense. That makes sense if it's all about Forex and cutting central banks versus not cutting central banks. So at least the major central banks out there. Okay, how about the US 10-year? We have been watching this. We did fall out, kind of back testing this triangle. We'll see how this goes. It is currently within the Fed funds policy range. I have my indicator. This is my brand new indicator I just created. But you can see this is the Fed funds policy, and back within it for the 10-year. However, if we go and we bring up the 3-month, which is one that I watch a lot, still below it. See that? Still below it, and can't quite get back in. Trying to get back in, but can't quite do it. How about the 1 month, 2 month? 2 month is low too. You can see this bottom that it had. If I put on a line, it's a little bit easier to see. But you had this floor all the way, and then it dipped below that floor. So let me pull this up. You can kind of see that. And I need to raise this up just a little bit there. So you can see what the 2 month is doing. And then if we go to the 3 month, it's falling out of the bottom. How far down do we have to go? I mean, the 1 year is completely outside of it. 2 year, not looking good, looking very droopy at the bottom here. We could draw a line right here. That's not looking very healthy. And then we get back out to the 10-year, and it's back up into the range, but not looking very strong. And this arrow is from this time last year, July into August, and then September, hit the bottom in September. When did the 10-year hit a bottom? Just look at this chart. What do you notice about this bottom? Vertical line. We'll put it right here on the bottom. Can you guys see that? Let me make it fatter and brighter. Bam. So what's kind of special about that date? September 16th of last year. I think the meeting's on the 17th this year. Look what happened. It bottomed as the Fed was cutting. That's completely counterintuitive. Oh my gosh. Do you guys understand how counterintuitive that is? At least to the common consensus view. Like if you would show this to any other Bitcoin maxi, or show this to pretty much any other macro analyst out there, and you're like, what's going to happen to the 10-year when the Fed starts cutting rates? It's going to go down. That's what they would say. But it went up. It went up. What in God's name? How do you? And then they stopped cutting. And what happened? It started going down. What explains this? What explains this? Well, it's very simple if you question your assumptions. Cutting rates convinces people because it's seen to be stimulatory. And so the 10-year interest rate is mainly long-term growth and inflation expectations, not growth and inflation, but it's growth/inflation because growth and inflation are the same thing in a credit-based system. They're the same thing. So growth/inflation expectations went up. It's that term expectations that's important. Growth and inflation expectations went up when the Fed started cutting rates. Psychological effect, right? So the 10-year started to rise because growth inflation expectations started to go up. And then when they stopped cutting, growth and inflation expectations have been trailing off. All right. Now, this isn't going to be what happens this time, most likely. If they cut this month, this is not going to be what happens this time. Most likely because we're too far gone. We're too far gone. And as you cut at this point, so here they're cutting, trying to get back to neutral. If you guys remember the narrative at the time was that they have inflation under control and they want to get back to around neutral, and they always show their dot plots and everything was kind of smoothly coming in. I don't know what they said the neutral rate was, like 3.5% or something like that. Okay. So they're just trying to get back to neutral. But now, if they start cutting, it's a different story. It's oh shit, the labor market's crashing. Boom, 10-year goes crashing down. So it's going to be a different psychological effect on the market now versus back then. They should have just kept cutting. Yeah, rates will go higher. The 10-year would have kept going up. If they would have still cut another 2 cuts, maybe the top of the 10-year, it probably would have made a new high. This high was 5% back here in October of 23. Probably would have made a new high if they would have kept cutting a couple more times because growth inflation expectations were going up. But they didn't do that because they don't understand what the hell they're doing. Okay, let's go back to some more macro stuff. Oil is going to be the next one. And let me go back to candles. I like candles. So we're below this previous support, turned resistance, turned support. Now maybe resistance again. So we'll see how this plays out. Nothing significant to report at all in the oil markets. I haven't seen a lot of headlines. Let's do something. Let's do this. What am I doing here? U.S. So they have weekly oil production. They have weekly oil production numbers. And you can find it at EIA.gov. We'll go in here. Computer's running kind of slow. What is going on? There we go. Here it is. So then we can come down here to the bottom of these weekly. They're way behind too, by the way. So if we go back up, this is for June. What the hell? This is for June, this data. Oh no, sorry, May. So they're many months behind. That's how it typically is. But the latest number we have is 13,488,000 barrels per day. Another all-time high, higher than this 13,464, higher this 13,453, all-time high. Here was a 13,450. But yeah, so U.S. oil production is at all-time high. And all these peak oil people, they're constantly trying to scare you and stuff. Oh man, I can't see that. Why do they do that like that? Let's see if I can zoom in a little bit different. Let's see if it comes out. It's just hiding under that reset zoom button. That is very, very annoying. But you can see it's just continuing to climb. Yes, it's slowing down a little bit, but I think some of the stuff that Trump came in with about land leases and all sorts of things, kind of easing the regulations, it's going to take 6 months to a year probably to see the real big gains from that. So yeah, it's kind of tapering off right now, but I bet this will spike. I bet by the end of his first term we'll be at over 14, maybe 15 million barrels per day from the U.S. I mean, it depends on the oil price, of course. If oil price crashes, probably not. But if we have a slow, nice decline, then yes, I think that we can reach 15 million barrels. So, all right, that's that for oil. S&P 500 rallying towards the end of the day here. Was looking a little bit ugly, but this candle is much better, much nicer. If we can see some of these other candles in the past. Let me make this a little bigger. I'll talk to you in a minute, buddy. So some of these other candles like this right here, this one, kind of looking like that. Not exactly, but a nice long wick on the bottom, which I see as generally bullish. So we'll see how that turns out. Any questions or comments, guys, put them down below in Telegram or on YouTube. So, all right, that is that. Let's go to Twitter and go through a few tweets here. Oh, right here. Here it is. There are two kinds of MSTR investors. Bitcoin maxis, they focus on BTC per share, or fiat speculators, they focus on USD per share. So I agree with that. Okay. Oh, Spock, if you're around, are you in the chat right now? No, I don't see you. I was going to ask you what you thought of this Brazilian hearing. How did it go and all that stuff. But yeah, that's going on right now today down in Brazil. Altcoin season. Okay. PayPal founder. We don't need to care about what he says there. Okay, this is a minute 30 discussion, and we'll listen to it.
There's a lot of people that are nodding with you because we can deflate our way out of some of the step, but the difference between 2% and 3% compounded for the dollar is devastating. And I don't know, for you to just blow it off is a little weird. There's a reason they want 2%. Anyone can move goalposts. If you compound 3%, that's 50% higher than 2%.
Do you know where 2% comes from?
No,
but 2%
3%, it would be, would make all of us feel awful in 10 years.
2% comes from the Bank of New Zealand in the early 90s.
It seems like a good number to me.
But it's an arbitrary number. What you've got to take.
5 is an arbitrary number. If you want to deflate 36 trillion, let's go to
10. Let him talk,
then.
Joe.
I don't want to pull the rug from under U.S. economic exceptionalism. I think we are outpacing the rest of the world.
We started to at 3%.
I think we are investing in the economies of tomorrow. In the growth drivers of tomorrow.
Government?
No, the private sector, everything else. If you push this economy into recession...
The private sector is not what causes the inflation.
Joe, if you push this economy into recession, you will not just lose current standard of living, you will lose future standard of living. We are in a very good position.
3% loses the future standard of living. That's the problem.
2.5 to 3 is what I said. You went immediately to 3.
Well, if you say 3 at the high end,
and as long as inflation,
okay with it.
As long as inflation expectations are stable, you can navigate.
You better buy some Bitcoin, Mohammed.
Better buy some Bitcoin. That's funny. Well, notice in this how it's all prescriptive. He knows what's best. And it's so arrogant to think that you know what's actually happening in the economy. It is so complicated. You have a few data points, right? And what gets measured gets managed. You have a few data points. And you think you can manage this? Nah. The market is going to chew you up and spit you out. It's going to do whatever the hell it wants to do. whatever the hell it wants to do. The Fed has no control. I mean, there is maybe some control in the fact like government spending, fiscal spending, or different programs, different tariffs. You can change the structure slightly. But I mean, is that I just hate to give up on the complexity argument, because it is so complex that nobody can prescribe what to do. And if you're prescribing what to do, most likely it's going to have unintended consequences. And you're not going to be able to design it well. And you just got to have these trade-offs. On top of that, I would say you think that you are making these prescriptions for a certain reason, but it's most likely not that reason. You think you know why you think that, but you don't know why you think that. I mean, as you can tell, I'm probably, I've been going into actual consciousness and theory of mind stuff, and nobody knows what consciousness is. Nobody knows what these people, or how we think and how we get to our decisions. But anyways, okay, let's move on. This guy, apparently, he's warning action call for entire real estate industry. He's talking about how this industry is dying. There's monetary debasement, all this bad stuff. But I don't want to listen to the whole 13 minutes. It's also very bad audio. I mean, I have bad audio already, but his is really bad. Okay, let's listen to this one. So Strategy's treasurer has to, what does he have to say about MSTR critics? So let's turn this one up.
What do you think about the criticisms when you have these pundits and these mainstream voices who criticize what Strategy's doing, and they look at it as something that is completely unsustainable? What do you say to them?
I'll say it's just novel, and there are some Bitcoiners who have done the work, but not enough work on the corporate side of the theory. There are definitely the non-Bitcoiners who have definitely probably not done enough work to understand what's going on here. And it's very novel. And we are learning constantly as we are building the strategy, and people are also learning. So there's a lot of learning behind the scenes here. So people just need to do the work. And we feel good and we feel confident about our execution capabilities and our management here and the strategy that we are doing. So we are kind of pioneering it, and we are thinking very hard and deep about this and very thoughtfully of how to execute the strategy. So
non-answer.
I think people just need to do a little bit of more work to understand, and hopefully these conversations will help people understand how.
Well, tell him how to do the work. Tell him what's going on. He doesn't know. I mean, he's probably not good with interviews or something, but this is a terrible answer.
We are doing things differently, and why things.
I mean, if I'm a $1 billion manager of some fund and I heard this dude, it would not inspire confidence in me.
Will work and how we think they will work versus whatever criticisms they have.
Okay.
What do you think about
Get Sailor out here. Get this guy back in the office. Okay, let's see. What do we got here? Okay, this was a good thread. So this is the one I wanted to say, talk about here too. Not gonna lie, I'm the biggest Apple hater for very good reasons. But their last research paper explaining why they weren't interested in pursuing LLMs seems more and more like it's gonna be correct. Now you guys know I'm an AI hater. This Manser AI says, disagree, LLMs are still the most revolutionary technology of the past decade, and it isn't even close. Sounds like military grade copium to me. I mean, obviously, was this AI generated? Maybe. His name is Manser AI. Revolutionary technology. There's several. I had this back and forth a little bit with Guy Swan, and I don't know if I told you guys about this. It was just a little tweet thread back and forth with Guy Swan, and he was like, "Oh my gosh, AI is going to be so revolutionary." All this stuff. I was like, "No, it's not. What are you talking about?" He's like, "Oh, I've coded a couple apps and don't even know how to code." And I'm like, "Okay, but let's think of this as opportunity cost. Well, what didn't you do? And would that have been more valuable than prompting AI to build an app that nobody is going to use? I mean, you can't, like, think about this. If AI allows everybody to code and everybody codes their own apps, does that work? No, because apps are sustainable because you have multiple users, right? So everybody coding their own app doesn't make any sense. One, there's just not enough room in the market. It's not how these things work. All right. There's a billion websites. The billion and first website by a podcaster probably not going to revolutionize the world. Okay. Also, so that's the opportunity cost and market structure there. But also, everyone has a comparative advantage in something. So when you think about economics, the idea of comparative advantage is usually talked about in trade, international trade. So this country has a lower opportunity cost of making a certain product than another country. So you could have a country like the United States that's better at almost everything. So the United States today, or you could say the UK back around 1900 or 1850, whatever. There's certain places that might have an absolute advantage in everything, but they always have a comparative advantage in many fewer things. So like one country that's not very good at anything, but they have a low opportunity cost for one thing, that's their comparative advantage. Okay. So AI does not equalize comparative advantage. It doesn't wipe out comparative advantage. Everybody is still going to be best suited or best off doing one thing or doing their thing. Just because everyone can code an app doesn't mean everyone should code an app. So that was my back and forth with Guy Swan. Now here, revolutionary technology. I mean, I use it in a minimal way, I think. I use ChatGPT in a minimal way. I use things like Midjourney for image production. I do use Grok as to go back and forth. If I think ChatGPT is making a mistake, then I'll ask Grok, and so there is some back and forth, but it is a lot of waste of time. And a lot of times people think that it's saving them time, but to me, a lot of times it's wasting of time. Anyway, let's see what he responded. He said, use case, bro, the Copers are the LLM cultists. It still hasn't replaced any jobs. It still failed 95% of corporate pilots. It's still no plan to profitability. This is the big one. In my mind, this is the big one. CEO lies his ass off and people forget. They're handy tools and I use them daily, but they're way worse than 2010 Google before SEO for 100,000x the cost. Yeah. The profitability thing, that's my big sticking point. I just don't think they can ever become profitable. And it's going to be exponentially higher costs from here for minute gains in abilities. And it's just not ever going to be profitable. Okay, so that was an interesting post. Let's come down here. Kraken founder says live on Bloomberg that trillions and trillions are coming into Bitcoin. This is a 47-second clip.
So I mean, we're really early. We just had at the symposium, we kicked it off and we started talking about global finance and what's going to happen in the ecosystem. We had a very U.S. look at it, and then we had a very zero-sum look at it, which is, the value of Bitcoin is going to be more synonymous with gold. And our take has been more that Bitcoin is a protocol, it's a network, and you have another set of protocols like ETH, etc. And that the way in which we think about it today is very linear, and it's hard to think about what is exponential and super linear. And so the way I think about it is that we're just in the really, really early innings of what's going to be trillions of dollars coming into the ecosystem, building against it, and then the value continuing to grow.
Can you explain more your...
Okay. That reminded me of something I wrote for the premium folks, and I'll share this little section. If I can come down here. Okay, right here. I'll zoom in. Okay, so I'm talking about, has the bull market even started? That's a out of consensus view. I talked about it recently. Whale Panda had a good post on Twitter about it. And so I'm kind of thinking through this. And in the past, we had different types of cycles in Bitcoin. It was mainly retail driven and FOMO driven and degen driven. Okay. Pump and dumps, recycle into Bitcoin, pump and dumps, recycle into Bitcoin, that kind of thing. There was some more kind of serious investment, but not much. And that got us to $60,000. Okay. In the blow off top, or in a massive wave. But we don't have those cycles. And those aren't typical TradFi type. That's not typical TradFi behavior. So what if this cycle is more TradFi? So how does a TradFi cycle go? Well, in the early phase of the TradFi cycle, you have institutions and smart money. So you have those people buying, most likely, I think it was the UAE and Saudi Arabia, and those guys were really buying. And then Larry Fink went over there and he had his Middle East tour. And then he came back, and 2 weeks later or something like that, they announced a Bitcoin ETF, where they applied for a Bitcoin ETF. So I think he went over there and he saw that the Emiratis were stacking Bitcoin, seriously stacking Bitcoin. So those are the very first institutions. Then you get BlackRock, you get some of these other players and investors through BlackRock, through the ETFs, through MSTR, that type of thing. And that's the institutional smart money. Now we're in like this middle phase. And I'm talking about this in relation to what this guy just said about where we are in the market. Okay. So this middle phase it's broader participation. What are we seeing right now? I just said that in the last day, BitcoinTreasuries.net has added 2 public companies in the last day. And I bet it might not be that fast all the time, but it could be as much as 5 public companies a day announcing a Bitcoin treasury strategy. And it's not going to be a ton of Bitcoin. It might be $10 million that they're just going to park on their balance sheet. And yeah, to me or to the average person, that's a lot of money. But to these companies, it's not a lot of money, to these public companies. And a lot of them are zombie companies. They're borrowing money to pay off old debt. I mean, that's the definition of Ponzi scheme too. If you say MSTR is a Ponzi, then they're also Ponzi. They're zombie companies, but it's not really okay. It fits one characteristic of a Ponzi, but these companies can buy Bitcoin, and now they have something on their balance sheet that makes them not a zombie. And we're in this middle phase where this broader adoption is starting to spread out. The width of this cycle, the width of the bull market is being formed right now. So we had the early phase institutions and smart money. Then we have right now the broadening of this. And how long does the broadening take? I don't know. We're at 169 public companies. How many private companies? Quite a few private companies. Maybe if we get to a couple hundred private companies, well, let's just see. They have it on the website here. Private companies. Let's see how many they're tracking. Okay, they're tracking 57 private companies. That is the BitcoinTreasuries.net folks. 57 private companies, 169 public companies. So maybe if we start getting up to 250 on the public companies, and maybe even 150, 200 on the private companies. So we're getting double as broad as we are now. So the middle phase is broadening out this bull market. And then the final phase is the retail driven mania. So we're not even there yet. Let's go to a chart. Let's go to Bitcoin. So what does this mean? Okay, we'll go to a weekly. Get rid of this. So kind of what I'm thinking in these phases. So this is the bull market. We have this linear trend. And would that be super linear? I'm not sure, but because it's an exponential chart, but or logarithmic chart. So we have the smart money, the Emiratis, and probably some Russian oligarchs and shit like that. They're buying here. All right. Interior, let's get rid of you and just make it exterior. Okay, so they're buying there. Maybe you could stretch it up. They're buying in here even. Who knows? But now all of a sudden we're starting to get some, that's phase one. Now all of a sudden we're starting to get some treasury companies. And we can maybe take this, overlap it. Treasury companies might be in this type of box. Where does it stretch out to? A year from now, a year forward. So this is the broadening of this bull market. And we might even just get little like that. It just keeps going up. Okay, during that phase. The broadening of the bull market. Phase one, phase two. Phase three is the mania. The pleb mania, whatever you want to call it. We could extend it however high we want. But then that's when it really starts catching on and we just go boom. You know, that's the bubble right there. And that's the way I drew this. It goes out to June of 27. But as I was talking to Stephen Luca yesterday on the BitcoinTreasuries.net Twitter space, we said that there probably won't be, we agreed there wouldn't be a bear market per se in Bitcoin unless we have something like this. Unless we have a blow off top like this. Because there's just not enough exuberance to have a blow off market, a bear market if we never had a blow off top. So that's kind of what I'm looking at. Dex Invictus, what's going on? Yeah, you're late, buddy. You can go back and watch it. Just getting close to wrapping up here. Let me check Telegram and see if there's any other stuff. Clayton Stromberg says, can I tell you my origin story? Like, what branch did you serve in and what job? I'm in the Coast Guard right now. Curious what led you to where you are today. Okay, real quick, man. So I went to college and I thought I wanted to be an engineer. So I was in aerospace engineering as my major, but then I took an econ class. Stupid. I took an econ class and I loved it. I fell in love. I mean, I already knew that I really liked economics because my dad is a big libertarian, Ron Paul guy, big gold bug. And so I knew I liked economics. So then I got a degree in economics. Okay. And that happened. I was in college during 9/11. And so then, I was thinking about, do I want to go get a PhD in economics? Because I was kind of wanted to work with the World Trade Organization. That was kind of my dream at the time. And you need a PhD. So I was like, do I want to go to a PhD program? Not really. I didn't want to do 5-6 more years of school. Thought it was kind of dumb. And it was right after 9/11. I had my degree, so I signed up for the Air Force. So I was in the Air Force and scored real high on all the entrance tests. Pretty much had my choice of job, and I decided to be, my AFSC was a 13 Bravo, which is an air weapons officer. And I flew in the back of an AWACS jet and was like air traffic control in the sky. So that was my job. And there's some secret squirrel stuff along with that. There's some capabilities. And so I did that for 10 years. Then I got out. And that was right when Bitcoin was popping off. And I remember I was a gold bug the whole time. So every paycheck in my adult life, I bought gold with it, gold or silver. And then when I found Bitcoin, after the 2008 financial crisis, I didn't, hold on, my family's texting me and it keeps coming up. Okay. So yeah, the great financial crisis, and gold didn't take off. And there was all this QE and all this money printing, supposedly. Stand by, guys. Sorry, my wife is blowing up my phone. Okay, sorry about that. So yeah, my great financial crisis, QE, gold didn't do anything. None of their freaking predictions came to be. The Austrian school let us down as a gold bug. And so I found Bitcoin, and it was very exciting. And so I went full bore into that. Tried to do a few things after the Air Force with some startups. I had some friends that were doing some things and experiencing like accelerators and things of that nature. Really hated it. Hated that type of lifestyle and all that. So then in 2016 with the scaling debate, I decided I wanted to start a podcast because these people don't know anything about economics. I mean, a lot of people do. Like Pierre Rochard is really good. Saifedean he was really good. I think he's gotten worse over the years. So there's a few people in the space that are, good economics, but I thought they were looking at the scaling debate all wrong. And I had something to say. So I started a podcast, and that kind of just has been what I've been doing ever since, kind of freelancing, going to do different things like the Fed Watch stuff came around during COVID. And I was doing a lot more trading in the early times of Bitcoin, kind of got away from that. Just freelance with my content, trying to build out this community. And also I have this dream of doing a whole economic theory, like a complete economic theory. And I'm getting closer and closer to that, I think. So I've been working on that pretty diligently for about 6 months and hope to continue working on that. And yeah, so that's what I got. That's my backstory, man. So thanks for asking, Clayton. All right, so let's see, DT. Oh, Reed says very quietly the 200-day has crossed the. No. It's kind of hard being a family man. I have 4 kids, and it's after school. It's dinner time, so it's getting kind of busy around the house here. Okay, so 200-day moving average. Just bring that up. Reed asked about this, or said about it, mentioned it. So 200-day moving average. That's not daily. That's weekly. What the? All right. Yeah, it has. The 200-day moving average has crossed 100K. A lot of people are talking about 100K being a hard floor now. I think that's pretty much going to be the case. If you think about what we said at the beginning with the 100,000 euro supply zone, and we just passed the $100,000 supply zone, and I think that's going to be a pretty hard floor. I think a lot of Bitcoin changed hands around 100,000. And so, yeah, I would say it's probably 80-90% chance that it never goes below 100,000 again. And if we go up from here, like let's say we make another new all-time high, I think we can get up to the 98% confidence that we're not going below 100,000 ever again. Okay, while I agree with your sentiments regarding not having a real bear without a significant price pop, mostly because of institutional involvement now, I'm not sure I agree with the framing that it can't happen without a blow-off top. We didn't really have a blow-off top in 2021, but we definitely had a bear. Okay, that's a good point, DT. Let's zoom out and take a look at that. So this wasn't a blow-off top. You're right, but it was a pretty damn parabolic move here. So this breakout to this top of this run, 400%. Like if we run 400% right now in a matter of several weeks or maybe 3-4 months, that would give us enough juice to have a bear market. But if we don't have something like that, if we just constantly go up, I mean, what would you call a bear market? What if it went up like this? Okay, so it keeps going up, and then we come down like this. Is that a bear market? Let me draw that a little better. Okay, so it comes up. We just keep going up straight. Then we kind of go down or consolidate, and then we go up. Like, is that a bear market, or is that just a consolidation, a long consolidation within the overall bull market? I don't know. I mean, that's personal preference, what you want to call that. But I do think that there needs to be some juice to force a bear market. So a bear market would be more than 20% correction, right, for an extended period of time. So if you use that simple definition, then yeah, definitely we'll have a bear market, but not like where we go down 80%. We might have a 50% or 40% bear market instead of the 80% that we're kind of used to. Okay, let me check YouTube, see if there's any. Dex, you joined the Telegram finally. Great, man. Welcome in. FedWatch was amazing. Oh, thanks, man. Speaking of FedWatch, let's go look and see what those minutes, if they had any effect on the CME FedWatch. This is the pricing in the market. So it is coming down slightly. This is the chance of a cut at the September meeting. I think it was about 85 at the beginning of the day, and now it's down to 80. But this can go, if there's a bad jobs report or something, this can go to 99% very, very quickly. And we still have a whole month until this meeting. So there you go. All right, let's see Dex, if you liked FedWatch, man, make sure that are you on Twitter? Because I'm doing spaces for BitcoinTreasuries.net. BitcoinTreasuries.net. I'm doing their spaces every morning, 9 a.m., trying to get as many interviews going as possible. Interviewed Stephen Lupka yesterday of Nakamoto, formerly Swan, And then I'm getting British Hodl on Friday. And I'm trying to work on some people around, the Treasury space to come on and get some regulars going. So check that out, 9 a.m. on Twitter. The handle is BTC Treasuries. BTC Treasuries. Okay, well, if there's no more comments here, appreciate you guys putting comments in today. It was a fun one. So, all right, I'm just going to call it there. You guys have a great rest of your day, and I'll see you on the next one. Bye.